I presume you all can see the slides now. As you can see, when I put the title, which is fourth quarter outlook, windshield on takeoff, where while I do expect that as the world entering, or the northern hemisphere entering into autumn winter season, then we can expect that the SARS 2.0, or so-called COVID, start to come back. And but frankly speaking, there is one factor that I didn't really factor in is Donald Trump is being infected and is hospitalized now. But for those who are in the aeronautical engineering, or who are in the airline industry, I think you know that windshield technically is a wind of a different speed at different layer of air, and it is very dangerous to the takeoff because it can cause the plane to lose speed and then to go into a crash. And this is exactly looking into this fourth quarter, we are facing such risk to the market and to the economy. And disclaimer is as usual, essentially, in Malaysia, we don't have a stockbroking license. So what I'm sharing with you here is essentially for information only. Now, I think everybody knows, and we all would not want to have the nightmare where everything comes to a stall again, right? I mean, when the first, this COVID started, most of the countries in the world, although with a different timing, go into a lockdown. That's where, you know, the earth really come to a still, and all the economic activities and of course of the share market. Now, the question now is that currently, essentially, we are in the phase 2 in combating this COVID-19. Why I say phase 2 is on the phase 1, that's where the whole world, you know, come to a stall, is where the government is trying to contain the outbreak, right? Trying to reduce the reproduction rate. Some call it R0, some call it RT, but at the expense of the economic activities, right? Now we are back to a more balanced. That's where every country start to resume the activities, but at the price of their containment seems to be losing control on certain countries. Now, the question is that I don't think it's a question of whether there is a second wave. It is more how bad the second wave will be. The reason is that you just focus on the chart on your left side, which is this one, is an academic research that indicates that actually for every 1 degree decrease in temperature, which is below 25.8 degrees Celsius, actually the infection rate decreased by slightly less than 5%. And then it reached the bottom at 25.8 degrees Celsius and go up, slightly up again, even during summer season. And as now we are entering into into autumn and winter season. And in fact, we just did a rough study and a cross-check on the situation, and it turns out to be very clear that it is true. This is the situation in France. And you can see that, I will explain to you what is K indicator later, but K indicator is an indication of whether a second wave, third wave is coming. And the light gray line actually is the daily average temperature, right? Whereas this is the moving average temperature. You can see it's very clear that when it hit, right? This is inverted scale. So when it go up, means the temperature is lower. So you can see that when it crosses above 25 degrees Celsius, 25.8 degrees Celsius, actually you can see that the indicator tells you that second wave or third wave, depends on country, right, is actually coming. And we are actually around here, where temperature coming down a little bit, the number of infection comes down. So when we talk about Malaysia, and bearing in mind that Malaysia is a very small country, and for it to move further in terms of economy, we need also to know about the global situation, right? So just now I mentioned that the K indicator is technically based on a model. I think most of you are very familiar now on the coronavirus, in the infections. It's called the susceptible, infected, and recovered model to compute the this K indicator. And like I say, Malaysia is a very small country. Our economy will have to depend on the global situation as well. So a rough look into the major economies in the world now, where are they? I mean, are they facing a risk of a second wave, or even sometimes certain countries can be third wave? So if you look at the red line, which is the K indicator, for US, I think you see slightly gradually increasing, although it's not at the alarming level yet, right? But France, you know, it's very clear, is already entering into a second wave. Germany also gradually entering into second wave. And China actually is already ended the third wave. And now the risk is, you can see a minor uptick, which is not really being fully reported because you know that they are having a long holidays now, and there is plenty of people movement. So we will have to monitor carefully, and if China also facing a serious second, actually it's a fourth wave already, then that will have a very serious impact on the global economy, and definitely on Malaysia and also to the market as a whole, right? Japan is very clear, they just over the second wave, now it's slightly being stabilized. So you can see that major economy, some of them already experienced second wave. Now it's a matter of whether the third wave to some country will come or not. My view is that, like I say, it will come. It's just that we believe that the governments or in the world now, or the leaders in the world now are being more experienced in combating this COVID virus. And therefore, I don't expect a full lockdown as what we've seen during the first wave of the coronavirus, but essentially it will be more on the so-called district or regional type of a lockdown. And because if we look at the stringency index, which is developed by University of Oxford, actually it tells you very clear that if you can, you know, impose not necessarily full lockdown, so long as you increase your so-called stricter conditions to combat the coronavirus, actually you can bring down or you can contain the second wave. Like for example, China, you can see that during the second wave that happened around here, right, immediately it becomes more stringent, right? I mean, people in Beijing cannot travel out of the city easily, and the moment it becomes more stringent, right, not the whole city lockdown, essentially, right, it being contained. Third wave also is being contained. Now we are closing to whether the fourth wave, and there's still room for them to be more stringent, right? Because the index is only at around slightly above 80. Similarly, Korea, you can see that when there is a second wave coming in, immediately stringency index increase. I mean, they become more stringent on in Seoul city and in certain areas. So what we are saying now is that with this experience, even there is a wave. I wouldn't say second wave, third wave, because it depends on country, where there is a recurring wave on COVID-19 coming in this round. I think the world is better prepared and it's not going to be that damaging to the economy, right? And another very interesting part is that this is also another study, and you can see that actually the impact of containing coronavirus also depends on the information being transmitted out or disseminated by the government, because especially in the second wave situation, people will be more self-disciplined, because if you know that, you know, if you don't follow and keep social distancing or what have you, then ultimately you'll be, so to speak, being locked up in your own house, which is a very stressful. So I think the second wave or the subsequent wave that is coming will not be that damaging to the world economy, except, I mean, unless the countries didn't manage it properly. So in that context, when we look at the global companies, essentially the earnings actually, or rather to say the revenues, actually has bottomed up in the second quarter. Of course, it is not across the board. You can see that airlines are still very struggling. The one that come out from the coronavirus faster, right, like China, it improved faster. Whereas Asia, including Malaysia, right, we know that certain industry like airline, even like the food services, which is technically on the restaurant, because of social distancing, is still struggling a little bit. But it's also very clear that Asia being, and including Malaysia as well, being part of the manufacturing hub uh, and inside part of the supply chain, right? The machinery industry and the tech is the one that already start to bottom at the second quarter. Now, so the question is that how how well the economy will recover. And of course, this one I think is very familiar to everybody. If you just look at the mobility index, it's very clear that actually it has been back to the pre-coronavirus. But economy is not going to be that strong because of the social distancing, right? I mean, you can't expect the restaurant to go back to the pre-coronavirus of the type of sales of the revenue because the number of patrons to be in the restaurant is being reduced by half, right? So, and this is very clear because when we look at G7, right, during the summer vacation, right, the mobility increased, and then when start worry about second wave, it comes down. So it tells us very clear that, you know, things are not going to be as bad as during the first wave, but neither you can expect it to be back to the 2000, or rather to say pre-coronavirus level within this quarter. And my personal view probably will be on the most optimistic is the first quarter of next year. If not, it will be on the second half of next year, right? I mean, if you look at the air traveling, also it's very clear. China is the only one. The air traveling is back to the more pre-coronavirus level, right? The frequencies of flights, whereas globally it's still very bad. Similarly, world trade, right? After the pent-up demand, right? It rebounded, right? It rebounded. Then the world trade as a whole is still not as strong as compared, you see, September to September, right? So what does that mean to us in the world with Corona, at least for the fourth quarter? Now, when we look into, who will be the winner even after the coronavirus, it's very clear that you have to focus on certain industry, right? One is the DX, which is digital transformation, right? Those who are, at least not necessarily they are the inventor, but so long as even you are the user, you know how to leverage, right, on whether it's AI, 5G, blockchain, big data, and so on, then you are probably able to survive through and emerge stronger. Not necessarily you must be a unicorn. You can be just, a phoenix, right? After being, hit down by the coronavirus, but you know how to leverage on that, your business still can grow. These are where I think in terms of looking for companies, we have to pay attention on that. Another one, which I think this morning session, my fellow colleague in Singapore also did mention about the supply chain, the reshoring, right? There will definitely be a review. So therefore, we have to look into companies who can position themselves or is mobile enough to, let's say, shifting their business or their manufacturing base even from their home country, even within Southeast Asia to another country in Southeast Asia. And definitely healthcare and medical system, and of course resource-rich countries will still be able to do on a relatively well situation because you still need all these resources. Now, we know that the world won't be the same, right? I mean, you can see even there is toys, so-called work from home. But anyway, like I say, once the coronavirus is coming to an end, then it will make the movement, right? Rather than currently the world is relying on the big three, the Eurozone, the China and US in terms of the manufacturing and trade, this part may split a little bit more out, whether it depends whether it's back to the home country, right, like in Europe or US, or shifting down to partially to Southeast Asia. So these are the things that we need to focus when we start looking into what to invest. And it's very clear, I mean, it's not going to be just in time. Cost is not the most top priority. It will be more on a just in case and how resilient. So in that sense, of course, a country like Malaysia, we have one of the lowest geopolitical risks among the countries in the world, which we may see some benefit, but again, it depends on how well we can rebuild our infrastructure, especially on the telecommunication infrastructure, right? But in the meantime, especially if we take a shorter term view on the fourth quarter, and if we believe that life went back to normal, I don't like to use the word new norm, because new norm will tell us that, you know, things are very challenging where you have social distancing and so forth. But as far as in the fourth quarter is concerned, when there is still a social distancing, where the job creation are not back fully, even in Malaysia, we are talking about probably 20% in the worst case scenario, unemployment rate, then it is very clear that, you know, countries actually with the more older generations, because they already have the wealth, that were able to sustain or support the economy in the short term. So companies like Japan, US, you know, France, Germany will be, I mean, in terms of recovering speed, will be slightly better compared to Southeast Asian country as a whole, where we have more younger generation. And I know there are people arguing, well, you start to see a lot of whether those delivery guys, right, like in the Food Panda or Grab and so on. But when I talk to some of them, actually it's very clear. Yes, people who lost the job, they may be able to work or find a job, find some income through this type of services, right? Being a rider for Grab or for Food Panda, and in Malaysia we have also Hello and others. But the fact is that you just have to understand that, in fact, this is what they have been saying. You know, it becomes more competitive, right? I mean, before coronavirus, let's say you only have 100 deliverers, right, that riding around. Now we have more people joining the industry, so per hour delivery you can secure become less. So actually it didn't fully offset the income loss as a general. That's why you can see the economy recovery is still not as strong as the pre-coronavirus. So I will skip this because for the time constraint. Of course, the immediate risk we have is definitely trade war, US presidential election. And when I put an Antifa Boogaloo, it's because Donald Trump has already said that he does not accept the result if he loses the election. That will create some uncertainty, but this one I will leave it to my fellow colleague afterward, Jun Rong, to elaborate further. Now, trade war, let me put it this way, irrelevant of who will become the president, I think it is a direction that becomes unavoidable. And I wouldn't want to elaborate details, but for those who are interested, you can go to this website, so-called Council on Foreign Relations, and there is a report, special report on revising U.S. grand strategy to China. It has elaborated very clearly, and you can see this is irrelevant of who will become the president, right? It has made it very clear that revitalizing U.S. economy, right, to nurture those disruptive innovations, right, that bestow U.S. asymmetric economic advantages, consciously exclude China. So trade war will be there. So technically, countries like Malaysia must know how to position properly to overcome or to leverage on this trade war, and it will become worse, right? And let me put it this way, if Donald Trump is re-elected, I will recommend you to read these two books, because a lot of policies now also is following what is written in these two books, right, by Mao Chun-Yi. Now, like I say, of course, Huawei is getting the heat, but actually the impact is much less on the American company than to some of the Japanese company and Korean companies, because essentially US only supply 1% of the parts, which is only just the glass, right, in the Huawei handphone. But because other companies in other countries also being restricted if the ultimate user is Huawei. So these are the issues that even including Malaysia tech companies may face this type of challenges going onwards, that earnings may not be as strong as what everybody anticipate. Now, another issue, of course, like TikTok and all this, I would say it's still a political show, because no matter how, right, the popularity is still number one among all the apps, whether on the iOS platform or Android platform compared to the Instagram. And trailer actually is nowhere near there, although Donald Trump endorsed it. So these are just towards the presidential election. And at this moment, I don't expect to be a full-blown, because 97% of the US antibiotics raw materials actually come from China, and also others like ibuprofen, which is the steroid, and others as well. So I don't think they will go out so fast, but anything, it will be after the presidential election. And now, like I said, I wouldn't touch too much on the presidential election, although it definitely will affect Malaysia market as well. But if you look at statistics, any president who seeks for re-election, where his approval rating, right, after 1,000 days in office is still below 50%, none of them get re-elected. But we don't know whether Donald Trump will make the magic or not. But this is something that we have to bear in mind when later I share with you how we look at the Malaysian market, right? Of course, the latest news is that Donald Trump now is hospitalized, is using the latest so-called antibody cocktail, which is developed by Regeneron. Actually, it just recently developed. It's only on 29th of September. So it just tells you that if this works, actually the world economy can recover faster. Now people don't have to wait for vaccine. So we have to keep an eye on that as well, right? In terms of presidential election, I think I will leave it to my fellow colleague. But don't forget that there is also a midterm election in the Congress, and especially on the Senate is more important, because whether Republicans still can maintain the majority, or it goes down to a Democrat, that will affect the market direction. So when it comes to Malaysia, what does all this mean, right? Now, first is that no doubt Malaysia is already in the, actually it's in the third wave. You look into it, right? Second wave started here, right? In the early September, it come off a little bit, and then it resumed. And whether we can contain it or not, frankly speaking, so far I've not received the news yet. Some of you may know that today, as of now, I presume the meeting may just ended. Our Prime Minister is having a meeting regarding on this COVID-19 issue. So we don't know whether what measures will come out. Frankly speaking, I'm more towards the optimistic side, that I believe that it will be, at worst case scenario, at best it's just a ban on the interstate travel. That is the worst case scenario. But normally I think that it will just start to be more so-called lockdown only on the red zone. It's not the whole state lockdown or whatsoever. So, but we still have to keep an eye on that, because that is going to affect the market, right, in this quarter as well. Now, the issue is that, like I say, where the government is trying to balance between economy and reproduction rate, Malaysia currently is one of the worst. Actually, it's the worst in Southeast Asia. We are 1.19. Ideally, it should be below 1, right? That's where Singapore did a good job. Even Thailand did a good job. Philippines, surprisingly, is still below 1, right? So when it's above 1, that is very challenging. You can see China is below 1. That's where economy can actually have less disruption. So after today, we may see some disruption in our economy. Like I say, it may get a little stricter, but I don't expect it to be as strict as the normal MCO, right? So because if you look at the stringency index, we are just slightly above 55. At the peak is at 75. So we still have some room. I mean, it depends on what they want to do, right? Like whether it's a temporary close down on schools or whatever, right? In certain area, even shopping malls and so on, where people gathering, then that may help to contain the coronavirus. The the in Malaysia is the third wave already lah. In Malaysia is the third wave. You can see this where, right, when the second wave happened, stringency index, I mean, government take action quite fast, right? Quite fast, right? This is the first wave, this is the second wave. It take action quite fast, right? Now, so this one, we believe that there will be action from the government, but I would say that the disruption to the economy will not be as bad as during this period of time. Okay, so again, because another reason is because at this moment we are still not facing the so-called collapse of the medical system, because compared to the number of beds that is catered for this COVID-19, our current number of infections cumulative is still much below. So there's still room. Of course, you can't say anything. If this out of control, it will be, it will grow exponentially, right? So now, if you look into that, that's why when you look at K indicator, it's very clear compared to hotel booking and everything, when situation back to more normal, right? In the so to speak, new normal, when there's some, still need to maintain some social distancing compared to during the lockdown, right? You can see increase in hotel booking. You can see, except air traveling is still bad because you can't go overseas, right? Then you can see even going to Genting Highland also is quite strong because people are tired of staying at home, right? Or move within a small radius. That's why I believe that this round people will be more disciplined, because we don't want, and we want to avoid that it's a strict restriction that you can only move between your house and your office, or even just within your house and go to the nearest restaurant, right? So that's why I'm optimistic that there will be some disruption, but it's not going to be as worse as the first wave, right? So that is what it means. If you look at the indicator, everything is still below the pre-coronavirus level, whether at the retails, growth, and at the wholesale, right? It has not recovered, right? Even on the car sale, yes, I mean, some people leverage on the technically low interest environment, and because try to avoid traveling in the public transport, people are buying cars, but actually, unfortunately, more are on the second-hand car rather than the primary car. So we don't see so much here improve. But again, like I say, no matter how, I don't expect it to go back to the pre-coronavirus level until, right, the virus suddenly disappear from the earth, or there is effective. We just see whether the antibody cocktail is effective, I mean, as a treatment or a vaccine. So in that context, I mean, we are going into our budget for 2021. Everybody has a very high expectation, but I think there's not much magic that the government can do in terms, especially, I mean, infrastructure and all this is more spending, is more of a longer term, but to overcome the current situation, to avoid a double dip in the economy, especially in the service industry and others, I think we can't expect so much on the so-called infrastructure spending in the budget, right? And if you look into that, interest rate, Bank Negara, the previous just ended last month, right? They keep the interest rate unchanged, but I think that very likely, they are also trying to see whether the next 2-3 months, there is, I would presume there's probably another further lower on the interest rate, so long as inflation is still remain relatively stable, right? If you look into it, that's why, I mean, I'll say that economy are still not back to pre-coronavirus level. You look at the residential property, right? The approved loans actually is the approval ratio, so-called loan approved divided by the loan applied on the 3 months average level, you can see that it's still right on the way down. So you can't expect much excitement on the properties sector. Even on the passenger car, you see there's some spike here, like I say, because people try to avoid the public transport. But this is exactly tells you what is happening in the consumer sentiment in Malaysia. These are the two big ticket items, because the rest, I mean, you have no choice, but you have to spend right on your daily and all this. Now, loans wise, you look again like the working capital for company, right? Because of government policy, that's why you see approval rate is improved. But again, right, you can see that people still in need of the working capital. And after this moratorium and all this depends on what the budget will come out. I think this is the part that you need to support the SME, right? So if you look at total loans approved, it's still on the downtrend. So this is the current economy situation in Malaysia at this moment. Therefore, in terms of the, I mean, one key driving force of Malaysia GDP, which is the consumer sector, I think is still weak, at least for fourth quarter and probably will go into first and second quarter, right? And especially on consumer sector, you can see that the income growth actually is still very low, right? The growth is low. That's why you can't expect much strong contribution to our economy, which we have been relying on consumer spending over the last almost 10 years already, right? And this is a survey by the Radar, which is the Real Estate and House Developer Association. You can see that they are looking at the recovery of their properties, which is, I mean, general is 10 to 12 months, right? General is 10 to 12 months. Although a little pessimistic, but bearing in mind that when even developers themselves are not that optimistic, you know that the market is not going to be that strong, right? Now, Malaysia, another major economy is the crude oil. But crude oil prices, I think if you look into it, right, this is WTI. At this moment, it is quite range bound on the sideways. So in that context, government can't expect much extra bonus on the oil revenue, so to speak. So that also limit our government budget spending ability. And especially, like I say, going into autumn, winter, we expect the mobility also to remain not much difference along the sideway. It also indirectly tell you that the global economies temporarily reach a plateau at this moment, right? Now, in terms of crude oil, in terms of CPO, prices still remain strong despite that the locals' concern has over. If you look at the highlighted in yellow, this is where, you know, when locals, right, becomes a big issue, right, then you see a spike in whether palm oil, soybean, and all this. Now, palm oil prices will still remain some upside. For the reason is, again, Brazil, the COVID situation is still not that good. That may affect the soybean production as well. On the other hand, of course, they are entering into summer season, so that may change the equation. But at this moment, our view is that palm oil will relatively remain at the current level plus another 5% upside. So the next question, like I say, government is facing a very big challenge in the budget this for the 2021 budget on how to stimulate economy, where, I mean, consumer spending is not going to be that strong because the income level has not really improved so much. And secondly, this one, I also do talk to some, quite a number of people, including those medical people and some those study in psychology, doing research on that, the general conclusion is that no matter what happened, let's say suddenly the world is no more concerned of this COVID-19 for the reason that the COVID has disappeared or vaccine or the latest, let's say this antibody cocktail works, it will still take around 3 months for people to back to the normal pre-coronavirus behavior. This is a psychological factor. You still will be more cautious. So in that context, government is facing challenging in first how to stimulate economy, and secondly, Malaysia government also face another challenges which has not been discussed at this moment. Let's say if there's a vaccine, is it going to be a free vaccination for all people in Malaysia, or is it we have to pay? Here we assume that if it is a free, right? If it's free, essentially estimated that it will be around 0.32% of our GDP, the cost, right? It will further worsen our budget deficit, right, from 5.8 to 6.1, although I believe that rating agencies and all this were able to accept that, but again, it will put the risk, right, forward. Immediately, I don't think rating agency is going to downgrade us, but definitely it also will deter some foreign fund flowing in, right? So if you look at the GDP forecast, everybody believes it's 2021 will come back, right? But again, it all depends. If we are able to control the coming wave of coronavirus, I believe that these figures may be achievable. But if we are unable to control for whatever reasons, then this will sound optimistic, right? Malaysia, right, the most optimistic from the government is 8% growth, but I think to look it conservatively probably is at the 5.5% level, right? So when it comes to our market performance, right, unfortunately, despite we have some healthcare stocks, the market does not perform that well, right? Although it recovered faster compared to the previous crisis like 9/11 or SARS or even the global financial crisis, we rebounded faster, but from here, actually, it's trending sideways. And I have a hypothesis on that, right? I have a hypothesis on that. But let's look at what happened to our market performance first, right? We all know, right? KLCI seems to perform well, but this is because with our glove company, right? I mean, everybody know the secret here. Everybody know the secret. So if we exclude, right? We exclude, yes, among the ASEAN country, we still perform better, right? We're still down 13%, but a down is still a down, right? So it's still very challenging. Now, that is where if you look at how the market behaves, we are in a third wave, in a sense, we can call it, right? When coronavirus first happened, everybody go into panic mode because economy goes into stall. Then the experience, right, for all the major economy, the experience for the financial crisis, all the central banks has acted very fast, almost like together, lower the interest rate, right? Start to have quantitative easing, depends on where you look at it. Then it helped to ease off the worry of the so-called collapse of the financial system when we first saw it during the 2008 Lehman Brothers crisis that caused a panic. Only then after that QE comes in. So that's why, although initially everybody say, oh, worry of worse than the Great Depression, but it does not happen. And of course, with this plus liquidity, market rebounded. Then here, right, people are staying for a while because essentially, although economy reopened, but it's not reopened yet. Actually, just save the collapsing of the financial system. Then because you don't know where economy will reopen, how long economy will start to resume. So there is a sideway because you have the uncertainty on the economy. Once it's reopened, then of course with liquidity, people still look into the stock market, right? Stock market, but after that, it will be sideways because earnings have to follow through. So at this moment, now there is still concern of the subsequent wave that's coming in and what will the impact. Although personally, I'm relatively optimistic on that. That's where we are moving in a more of a sideways direction, right? And of course, very clearly, if you look at the valuation, right, PE is at relatively, over this period of time is at its high, right? And the most important is you look at the EPS, right? The earnings per share. You can see that it's coming down, and it has a very close, right, correlation with the market. So this is essentially, if 2021 earnings cannot follow through, there is an upside on the market generally, right? Of course, individual stocks will have a slightly different situation, right? So this is our forecast at this moment. This 88.217 is taking the worst case scenario on the US president and the presidential election. This is more towards a base. I mean, base case to me is relatively, to some of you may think it's optimistic, because what I'm saying is that the coming wave is not going to disrupt the economy as what we see in the first wave. So with that, right, if you take the EPS at 8.27, the fair value for KLCI at PE of 15.5 times is only 1,368. Everybody will say, give me a break on that, right? But if on my base case scenario, where there is no full lockdown, the world are able to so-called relatively contain the coronavirus, right? We will probably see about 46.8% growth in EPS next year. That brings the index not much, but up to 1,553, right? And of course, in a worst case scenario, I don't know. I mean, to me, it's a worst case scenario to the economy. But in a worst case scenario, if there's a full lockdown where people has nowhere to go, stay at home to trade on the share market, then you'll see like what we have seen during this period of time, retailers coming in, markets start to spike up. And unfortunately, until now, I don't think we can expect much from the foreign funds flow in, right? Not only just on the economy issue, but there is a more structural issue, which I will share with you here, because our CI and even our market as a whole are still more on the old economy, right? We don't have so much new economy, whether in the CI index or as a market as a whole. The market has not had enough depth where, like I mentioned, into the new world, right? Digital transformation is the key, reshoring is the key, but we still rely a lot on financial and all this. So for a short-term recovery, we can see some excitement. For a long-term of the market, I think our economy need to transform, and hopefully there are more companies coming into the Bursa so that it can create more vibrance and excitement in the market. Now, our sector view at this moment, short-term wise, because of the second wave, or rather to say the subsequent wave, let's say it comes in, even it's being contained, right? I think there will be some revisit on the healthcare growth stocks, right? Plantation, like I mentioned, there's still some upside in the price because of the Brazil still struggling to fight against COVID. That will affect the soybean side. So that's why we retain a little more positive. For the neutral, right, auto banking, because all these are consumer related. And let's say, right, if we have some so-called constraint on moving around, of course, gaming and other healthcare, like hospital and all this, because don't forget, people always think that with coronavirus, hospital business should be good, but think of another way. Those who actually, for the normal illness, or those who need normal treatment may try to avoid hospital in case you get infected, right? So it's not necessarily a positive for healthcare, right? Of course, the rest just follow. Essentially, technology, we're neutral. I say, post-election, we don't really know how bad the trade war will be, right? Negative building materials, like I say, even developers themselves are negative, right? Construction, oil and gas, because it's still heading nowhere at this moment. Okay. Now, like I say, this is the ultimate that not factor in this scenario. I mean, we are looking at, although I put it directionless, we are looking at things are more of a normal situation, right? More situation where this is where it is. Donald Trump win the presidential election, Republican win the Senate, right? So I think global fund flow will prefer US than Malaysia, right? If Biden win and Democratic took over the Senate, I mean, whether this view, which is the more likelihood, I think afterward my fellow colleague, Jun Ron, probably will elaborate more. Essentially, the global fund flows will shift out of US probably to Asia. So practically Malaysia is one of the possible beneficiary. The reason is that because Biden is more towards how much he can implement, we don't know. I mean, it's more towards of increasing tax, big infra spending, social spending. So that's why I think market will shift from over here. Then when Biden and Republican, then not all policies Biden can implement, but it's still, there will be at least on part of the both agree upon is on the infrastructure spending. So that may also drive it to Malaysian market and the US market. Of course, if Trump win and Democratic take over the Senate, I would say market is in a directionless issue. So I think there are some questions coming in. But I have to say first is that because we don't own a stockbroking license, we won't comment on individual stocks. I don't comment on individual stocks. Okay, there is one question. I will put it very generally. Like I said, I won't comment on individual stock when you say on the plastic companies, right? Valuation, is it still attractive given the low raising price? I would say you have to depend on what plastic company. Again, I don't comment on individual stock. What I'm saying here, you still have to look into the fundamentals of the companies. But in a general perspective, when people still have social distancing, right? And I think you see it very clear that the demand for buying some food to store at home and all this increased, and it's still there at this moment, right? In fact, my wife go to a market this morning. The trader actually asked her to stock more foods because in case there is a lockdown, although I don't think there's a lockdown, but I mean, these are the psychological behavior, right? So what I'm saying here is that the package, right, the food packaging, right, demand will be better than normal circumstances. And then, of course, if on top of the low, raw material costs, then definitely it's a tailwind. But like I say, you have to look into individual company, right, fundamentals, the earnings potential, and then only we can talk about the valuation. So, well, again, whether banking companies will pay dividend, and this is not limited to banking companies. I think it all depends on all the dividend company. It's a matter of, I mean, there's a moral persuasion on the banking industry, but if you look at generally, right, essentially, nobody knows when this corona crisis will end. So that means that essentially, companies need to have some excess cash to stand by, right? That's why those so-called high dividend payout companies, right, may not continue the trend for a while. So if you buy in for expectation on a high dividend, you may get some disappointment. On the palm oil, I think just now I did mention a little bit. I mean, no doubt there is an overcapacity on palm oil, but because of the Brazil coronavirus issue, that's why I still see there is another 5% upside on palm oil, right? I see another 5% upside on palm oil. I think I have some question on the Zoom side, and that may be the last question before it ends. No, I think, okay. Like the first one is on Sintel, so it's not on my side. Like I say, I wouldn't comment on individual stocks, but here the question say that it seems that the price of glove stocks like our famous glove stocks, Top Glove or even others, Riverstone and all this, dropped when progress in COVID vaccine announced, and that, I mean, that is quite natural, right? I mean, for those who follow, you know that the order book actually is at historical high, and I mean, it's difficult for me to comment because we don't see the details of the contract. But if you can recall, I wouldn't say once upon a time, years ago, when people are hot on oil and gas, always say that the order book can last how many years, and then suddenly when the industry, right, turn south, all these contracts are being cancelled and so on and so forth. So if you look at it generally, like I said, you look at generally, we're not saying that companies are not telling the truth or whatever, but you look at generally, like I say, because we don't see the contract, but you look at generally, the general reaction from investor is very straightforward, right? Because once, right, there is a vaccine, then, right, you have less hospitalization, right? Less hospitalization. Of course, vaccination also need glove, but you just vaccinate once per person, then it's over, right? It's over, right, for a while. Whereas if hospitalization, every time you give treatment or you touch the patient, you have to dispose the glove and use a new one again. So the total demand is much different, and that's the reason that when, you know, any vaccine, it seems to be successful, and I wouldn't be surprised even this round when this Donald Trump is trying out on antibody, this cocktail. If that works also, it may put pressure on the glove companies, and even, I mean, for the vaccine companies' share price as well. And with this, I think the time is just exactly slightly before 1:30. So I think, let me see whether any other questions. Okay, there's a question asking what companies in Malaysia are affected by Huawei issue. Actually, listed company, not much, frankly speaking. It is more of a retailers and all this that is selling Huawei handphones and so on and so forth. Yes, we have some tech company, definitely they are affected. But if you're talking about generally on the listed company, it's quite minimal, right? It's quite minimal. Okay. Okay, there are two more questions on tech related, and I'm not very sure when the question saying the tech sector growth will accelerate, is it referred to Malaysia tech sector or generally? Because there's another question on the, although I'm not supposed to comment on Taiwan Semiconductor, but I'm just comment generally, the industry as a whole. Like I say, industry as a whole, first is that anything to do with Huawei and SMIC, right, at this moment, you know, even though you don't sell to them directly, so long as ultimately it go through to them, you will get affected. So the key part is that if you sell to US company, companies sell to definitely you can't sell to the Huawei and all this already, right? So it's very clear, and it applies. That's why the tech sector now, especially on the hardware side, you see that there are weakness in the share price in Japan on the semicon equipment and all this after the so-called front-loading demand by Huawei and all this buy the equipment. Now it comes to more difficulty. And the most recent, I think you all know the Toshiba semiconductor company. The name has changed, but I use Toshiba Semiconductor. I think it's more familiar with everybody. Has decided to postpone their listing because they sell the memory chips to Huawei, and that affect their revenue as well. So, in general, I think, I mean, if there is no amicable solution between China and US, let me put it this way, we will go into a world that companies will have to take position, whether you are US-centric or you are China-centric. And that is the call on which one you see has a better potential. So it also makes investment becomes much difficult because if you believe that US-centric has a better growth, but it turned out another way, that means you are going to see some underperforming, right? Underperformance and vice versa. So looking forward, like I say, until China and US can sit down, right, and find an amicable solution, right? Because this is technically talking about, I know China don't use the word dominating the world, but from the US perspective, right, it is challenging US number one position. So until both of them can sit down, either to say that it's all right, both of us be number one, or one of them say, agree, I'm just willing to be number two. Otherwise, this tension will always be there, and it will be bad, right, for a lot of companies that you will have to take side, whether it's US-centric or China-centric. So that probably will also affect a little bit long-term growth of the even tech sector as well. Okay, with this, I think it's almost time, and I will pass the mic back to Cosin.